Hey guys, let me show you how to quickly set up the opening range breakout trade. It's basically a tracking of the first 15 minutes of the day and buying as the stock or ETF or the Qs moves above the first 15-minute range or moves below the first 15-minute range, then you're going to short. So let me show you how to set that up so you can easily execute the trade. In TradingView, click Indicators, type in opening range and you'll see a long list comes up. If basically I'm just going to use this first one, the Gorb algo. If this goes away, you can click on one of the other ones. Some of them put price targets in. I don't really like that too much because I want to look at where support and resistance are for my price targets. And some of these put in just a 2 times the opening range or 1 time the opening range. So I prefer not to have that. So I'm just going to click Gorb algo, put that in. And this is a fresh day. This is the 8th of May that I'm going to show you. So this is before the open, just before the open. We've got this opening range breakout indicator in place. Let me show you what the inputs are. So, what it's going to do. Basically, it's going to track the range from 9:30 to 9:45. So the first 15 minutes. The lines are then going to extend for the rest of the day. So you can see your box in case we trade inside of that box for a while before it breaks. And on this one, the Gorb one, it has the prior day high and the prior day low enabled. I kind of like that. I'll show you why in a second. But if you don't want those, you can just click these and get rid of them. And that's basically it. Okay. So I'm going to click play so we can see what today looked like, the opening day range and how that's set up. So you can see, I'm going to pause. You can see the box starts forming. And this is a 2-minute chart, but the box will stop at the high and the low when we get to 15 minutes. So I'm just going to let it run. And there's our break. So this is the prior day high, this green horizontal line here. And the reason I like it is because it tells me what my most recent support level is in this case, because we opened above the high that we set yesterday afternoon, and then we pulled back. My first level of support is here at that high. So I like having this in the chart because it's easy. It tells me where that is without me having to look back at it. So now what we have is our high and our low are both in place with our box. So now a break below the box, we're going to short. A break above the box, we're going to go long. The highs at 488.74, which you can see up here. That's the high. And our low is at 486.95. So basically we're talking $1.79 range. So one of the ways then to do the trade is to look for around $1.79. Obviously you don't want to be exact into the penny. Another way to trade this, if we break below that opening range like this, is to look to put a stop in at support. So let me hit play and we'll start going through. You could do a couple of things. First, I should note that the stop for the trade should be the high. So the stop in this case is the 488.74. So giving it like $1.79. I'm going to hit play and tell you what I was talking about with the support level. So one way to do it now is once we cross into yesterday's high, and you see we dipped here, is to put in a close stop there so that you get stopped out of your position at a profit, right? Once it falls, you entered here, had a little pullback, you didn't get stopped out. And then once it clears support, once it breaks support, put in a stop so that, just put it, a little bit above, 10 cents above in a case like this where we're talking about a range of around $1.80. So on this break of the bottom at this 486.95 level, we went down to 485.82, a little more than a point on this trade. And I would lock in that point. A big reason is because we're at this support level. If we start springing back up, you'll be out of the trade and lock in your point. And see, I would have been out of that trade at that point. And again, it's why I don't like putting in a clear target unless that target lines up with a support area. In this case, where we're gapped above yesterday's close. The other thing with this particular day is that there was good news expected in an announcement from the White House on tariffs. So this is one of the reasons we gapped higher. And if there's good news in the market like that, I don't expect a big pullback. I expect us to generally be in an upward direction anyhow. So given the context of the news, I'm not looking for a big move down in this situation. If you want to, you can add VWAP as an indicator, volume weighted average price. You can add VWAP and that will give you confirmation. So basically, if you add VWAP in TradingView, I go to settings, go to this bands multiplier and just remove that. So you just have VWAP. Now the blue line is VWAP. And as confirmation, you could have VWAP set up that you only short if the price is under VWAP. And just the opposite, if it's a break above, if it would have been a break above this first 15-minute opening range, then you would only go long if we're above VWAP at the time that the stock or ETF breaks higher. So that's just an added, something you can do if you want for confirmation. The 20, which I generally use, as I've said in my other videos, doesn't really help in this situation if you're using it on the regular hours and not the extended hours. And the reason that doesn't help, and I'm going to make it the simple moving average 20, and I'm going to make it red. Okay, so we can see that easily versus VWAP, which is blue. You can see that the 20, because we're gapping, it hasn't caught up yet. So this is another way to get involved early, because if you're just trading off the 20, this is adding in another indicator, the opening range breakout, that you can use while the 20 catches up, whether we're gapping up or gapping down. If we had opened at the same place that we closed yesterday, then the 20 would have already been there. But if we're gapping, the 20 is going to have to catch up one way or the other. Either it's going to move to the market's going to come back to it, but it doesn't really help with this trade setup. One thing to be aware of is that as the 20 catches up after we've had a gap, you want to pay particular attention to that and see if it holds. If the market's in a very positive mood, often you'll get the gap, a move to the 20 on the 2-minute chart, and then a move higher. That wasn't the case here. If you had put this trade on and that had happened, you would have had your stop again at the top of the opening range. That didn't happen in this case, and the market actually moved lower through the 20 and then went sideways for a bit until after the tariff announcement, and then it moved higher. But this would have been a successful opening range breakout trade given a short here and a cover at support. Again, I just wanted to show you an easy way to set it up by inserting this ORB prior day high-low indicator into your chart. And again, like I said, you can use VWAP for confirmation. And you can use this on any stock, obviously, not just the Qs. One place where I use opening range breakouts a lot is on earnings. Keep an eye on earnings plays during earnings season. And when you get a large gap one way or the other, you can get a really nice setup with this opening range play. Because if you get a gap down on bad earnings, you can often get a move higher through this. So if you found that setup helpful, please hit like and subscribe. And I'll be making more videos like this around technical analysis and setups. Thanks.